guys, welcome to troylast.co.za, a blog where we offer financial advice and financial planning for the general public out there. And it's 2020, we're in the middle of COVID here in July, and I think in terms of the current situation we find ourselves in, social media is playing a more and more a better role in terms of helping you as from a financial planning perspective. So we certainly hope that these blogs that we post are helping you. Again, we do recommend that you speak to a financial planner or a financial advisor to assist you take into account your situation and your own liabilities and different merits that may be applicable to your financial plan. If you don't have one, we're more than willing to help you. Please drop us a line at troy@troylast.co.za. So anyway, today's subject is on retrenchments. We find ourselves in a lot of companies, SAA, Telcom, Edcon, a lot of companies out there are doing retrenchments. The retrenchment numbers are quite high. Adding to unemployment. So today's blog is with regards to that particular matter. If you're going through retrenchment, or if you know somebody who's going through retrenchment, please share this with them, and hopefully we can give you some guidance. So in terms of retrenchment, the way it works in terms of your packages, the first portion which we're going to discuss is your severance package. So the standard practice is for 1 week for every year that you've worked. So if you work for a company for 4 years, as an example, that would be 4 weeks worth of pay. That then is what we call a severance package. Over and above your severance package, you're also normally entitled to your leave pay, your notice period, and those type of things, bonuses, depending on what your contract says. So all of that money is excluded from the severance package and is treated from a tax perspective as normal income. Therefore, your normal tax tables in terms of income will be applied to that particular portion. The severance portion that we mentioned earlier, in this example, is called 100,000 Rand. That is non-taxable up until the amount of 500,000. But you need to understand where that fits in from a financial planning perspective, in the sense that you are only entitled to one amount of 500,000 between now and when you retire. So at retirement, we're normally entitled to 500,000 Rand tax-free from the portion that you take out from your retirement annuities, the 1/3, or wherever you take that money from. So what you need to bear in mind is that if you're taking the 100,000 now in this example, it therefore means that at retirement, that 100,000 comes off the 500,000 at retirement. So the retirement tax tables are then applicable. So that means then at retirement, instead of having 500,000, you've got 400,000 Rand that's tax-free. So the next part that we also need to discuss is your pension and your provident fund. So in terms of your pension and provident fund, at retrenchment, you could look at accessing that money from the company funds. Just also understand the way it works from a tax perspective is it works the same as in terms of applying the 500,000. The same tax table would apply. So what tax table am I referring to? On retirement, the first 500,000 Rand is tax-free. The next amount at retirement from 500 to 700,000 is taxed at 18%, and then from 700 to 1,050,000 is taxed at 27%, and anything over and above that is then taxed at 36%. Normally what would happen is if you were before the age of 55 and you weren't retiring and you took money out of a pension or a retirement annuity or something like that, that would be seen as an early withdrawal, and as such then the table would be different. The tax table would be the first 25,000 Rand tax-free, and then the next amount up to 660 would be taxed at 18%, and then from 660 to 990,000 at 27%, and then 36% thereafter. So there's two tax tables that are applicable here. The one is seen as a withdrawal, and the one is seen as in terms of retirement. But with retrenchment, the retirement tax table is brought to the forefront, which leads me to my next point. In terms of voluntary retrenchments and normal retrenchments, should you go the route of going the voluntary retrenchment, please, it's very important that you make sure that from a tax perspective, HR perspective, that the transaction is recorded as a retrenchment. If the transaction of you leaving the employment of the company is seen as a resignation, the relevant severance package to be tax-free would not be applied. You would be taxed fully on terms of that. You wouldn't have the tax-free portion. So the first thing you need to make sure when you're being retrenched is that it's recorded as a retrenchment. The next thing is, now that you're being retrenched, from a financial planning perspective, is to look at your budget. So looking at your budget, you need to look at what you can afford, what you can't afford. You also need to look at your policies that you've got. Certain policies that you may have taken in terms of your life cover, disability, whatever it is that you've got with your various institutions, may have a retrenchment benefit on it. Please understand that retrenchment benefit fully, because all that it may mean is that that particular benefit, let's call it life cover, gets taken over by the institution for a certain time period. Now, that time period will vary from institution to institution. It is not to say that a retrenchment benefit will replace your income. The other thing that also people do is, in terms of from making a mistake perspective, is an income protector. If you've got an income protector is not a retrenchment benefit. An income protector pays out in the event of you not being able to work for disability, dread disease, whatever it is. And in terms of that, income protector normally pays out from day 7, 1 month, 3 months, or depending on the period that you selected when you took that particular policy out. But an income protector does not pay out for retrenchment. The next part, or next tip that I can offer you in terms of financial planning, while you're trying to look at your budget and look at your portfolio, do yourself a favor, take your bank statement, highlight all your transactions. There may be transactions that you're not aware of, that you've forgotten, small policies that you may have taken out through some telesalesperson that sold your policy, which may very well include a retrenchment benefit or something to that effect. But understand your debit orders, understand what you're paying for when you look at what you're going to cut and what you're going to change, and adapt your portfolio accordingly. The other thing also from a financial planning perspective is, what do you do with the money to provide you with an income? So if you're looking to provide income for a short term, I would have money put in a money market account. If it's a long term and you're not sure where to put the money, there's voluntary annuities that you can look at. And the reason you might want to look at that particular thing is from Section 10A of the Tax Act. Well, although those type of products to be tax efficient in that you only pay tax on the interest. And that's going to be a far greater savings from a tax perspective than paying tax on income or capital gains tax and other things. So tax planning is going to play a vital role in your retrenchment in the next couple of months. So I strongly recommend sit with a financial planner or a tax practitioner. Let someone help you structure your portfolio so that you're not only tax efficient, but you've got access, that you're not locking your money in for a period and you're going to need it down the line and have to pay penalties to take the money out. I think at this particular time, cost sensitivity is going to play a big role in your financial budget. So you need to take that into account. So guys, those are the tips for the day. I certainly hope they help you. And please follow us on troylast.co.za for this and other financial planning tips. And again, if you want to drop us a mail, if you've got any questions, anything you want us to discuss from a financial planning perspective on these blogs, or you just want general advice, or you need a financial advisor, please drop us a line. Troy, Troy, at troylast, troylas.co.za. And guys, be good to each other, be kind, and make the world a better place. Cheers.